Hi, everyone. Welcome to another webinar. This one is a CPD event. I want to let everybody know that, people from New Brunswick, Ontario, and British Columbia who've joined can go to their portal and use this name, Law Office Expense Management, as the title, to actually aim for CPD hours. So you can do that. We'll mainly be talking today about, management of expenses, whether it be client or, office. We'll be talking both sides, managing client and business expense. Why is it important? What are you audited for, and why are you responsible for both these side of expenses? Okay, so we'll be talking about that. So moving on to the next slide, what's the agenda for today? Before we, do the agenda, just some housekeeping. If you have any questions, use the chat window. There is a support staff that's actually listening on the chat window, so, they'd be more than happy to, take all your questions. So, we'd be happy to take that. So go ahead and type your questions in the chat window. Now, the email that you would have received also has a link. Go ahead and give your attendance. We need your attendance so that, we can sync up with the Law Society for your attendance. So at the end of the webinar, don't forget to go back to the email and give your attendance. And if you have any other further questions, just use the chat window and we'll take it from there. Okay, so moving on to the agenda. So basically, we'll be talking about disbursements and business expense. We'll be trying to compare the two, and we'll be trying to see, what is it, understand the terminology a little better and how we can manage them. We'll be talking mainly about disbursement. We'll be trying to get into details of what are disbursements from trust account, how do you handle them from general account. We'll also be talking about recovery of expenses, we'll be talking about outsourcing and different types of disbursements, general disbursements in general. What is the expectation when it comes to the Law Society? We'll be talking about that. Then we'll also be talking about office expense. Why do you need to manage them? What's the advantage? Why should you be even doing that? We'll be talking about some important documentation that the Law Society expects you to keep, And finally, we'll be talking about analytics. What is analytics of expenses? Why do you need to do that? So those are some of the agenda items. Okay. Now, let's delve into the topic of expense management, which is disbursement, right? What is a disbursement, and what does it mean? What does it mean to my business? That's the first question. Now, disbursement by definition is an act of paying out or dispersing money on behalf of your client. The money is paid, by the business. It could be a cash or dividend payment, but it's being done by a lawyer or I took this definition from Wikipedia, okay, but it could be some legal professional might have to pay on behalf of a client, okay. That's the most important part of this definition, right? In layman terms, it's basically expenses incurred for your client by your law office. That's what we want you to take away from this. What is disbursement? It's basically an expense incurred by your client on behalf of your law office. Clearly, if client is not involved in this whole process, it's not a disbursement. For example, if it's a rent, if it's a salary that you're paying, or if it's some hydro bill or some bill that you're paying to maintain your law office, that's not a disbursement. But if you're doing that on behalf of your client, for example, you traveled and you're paying the mileage, or you paid some court fee and you're trying to charge your client, that is a disbursement, okay? In accounting terms, you need to record it in the books to balance accounting so that, we want to know when you spent it. Then you have to invoice so that, the client knows about the expense. And finally, you have to know how to recover it. Because you spent the money, the client has been notified using the invoice that this expense has actually happened. Now you need to recover this expense. So there are three steps here. One is the place where you spend. The second is a place where you tell the client. And the third is recovery of this expense if required. Okay. Now, what does the Law Society expect, in terms of audit is they want you to maintain proper books of these three things. When it was spent and how it was spent and where it was spent. How did the client know about the spend? Like, how was it invoiced? And the last one is telling them, like, hey, how did I recover for it? So they want to know all three aspects, and that's what the Law Society auditors are actually looking for. Okay. Moving on. Like what is business or office expense, and what does this mean to your business? Now, expense is an act of paying out money, such for a business like rent, buying a computer, office furniture, cash, dividend payments, everything that includes, but it's for the overall running of the business. I mean, you can always say like, hey, yeah, every business expense means something to my client, but this is not a disbursement. The reason it's not a disbursement is because this one is associated with your running of the law office, and it is not anything to do with, your client per se. Like, you can't take a rent and say, hey, I'm going to charge this rent to this particular client or something like that. Okay, so that's the whole idea behind, the office expense part of it. Okay. Again, in layman's term, expenses occur to keep the lights on. In your law office, like, whether it's rent, it's your hydro bill, your computer, your internet expense, cell phone, all these things, that you need to run a good law office is what we are talking here, okay? In accounting terms, you need to record it in the book so that you can balance your book, right? Like, so basically, sometimes, like, when there's an expense, if you don't record it, right, like, then you don't understand the HST portion or the GST portion of it or the PST portion of it. And the second part is, like, how much is the expense? Like, you don't know that. So in accounting terms, there's a lot to understand from expenses. Like, this is basically, it can affect your bottom line of your business, the functioning of your business. What are some of the critical measures that you can take to, reduce expenses, like, be more profitable? That's why you need to maintain that for accounting purposes, okay? Next slide. Now, what's the difference between disbursement and business expense? The difference is disbursement is recoverable, which means you paid on behalf of the client, you will invoice him, and you will get it back. That's the key difference. The difference is different. Disbursement is recoverable. Now, the recovery may be exact amount, more than what you spent, less than what you spent, but it's recoverable. Business expense, no, that's a one-way street. Like, it's basically like, what goes is gone. Okay, you can avoid it by planning for it better in the next year, but, what you incurred in the past just has to be recorded. If you don't track disbursements, the biggest problem is you don't know what to recover from your client. Like, you might have paid a court fee and you did not track it. Excuse me. You don't know that you have to recover that. So that means you're basically taking a loss in your business. And if you don't track office expense, right, you cannot calculate your HST, PST, or GST, whatever it is based on the province, how much you own. And the most important thing is the profit margin is unknown. Like, you have revenue, but if you don't have expenses, you don't know what's your profit margin. You might be having a lot of revenue, but at the end of the day, your take-home or your company may not be making a lot of profit, basically because your expenses are too high to run the business. To understand that, you need to track both disbursement and business expense in your legal accounting software. And this is the key element. To do this, you just don't need practice management. You can't just say, like, oh, I'm a very organized person when it comes to practice. I have all my appointments. I go to the court. I do all my job. You need legal accounting software that can work hand by hand with practice management to actually do that. So, that's the key element. Like, just practice management alone, that's having a beautiful calendar and a good tracking tool does not cut it. You need to have a good legal accounting software because only legal accounting can manage expense well. Practice management software cannot do, good, expense management. Like, even like if you have a good calendar, you have a good scheduling system, you kind of have almost everything. Give me 1 second here. Give me 1 second here. if you have everything, like it does not mean that you basically have it all. You need to have a legal accounting system so that you can track. Okay, how to manage disbursements? What are the key steps? Okay, now disbursements are organized in two categories. Disbursements can be straight out of trust account, or they could be from general. I just want to make a quick announcement. Somebody's trying to take my screen. I think you need to join the audio, not request to be a presenter. I want to be the presenter so that I can this content. So just try and get into the audio. Thank you. So what are the key steps? The key steps are identifying the type of the disbursement. How did I pay for it? Follow the money. That's the thought process. The money went from trust account, it's a trust disbursement. The money went from general account, it's a general disbursement. Right there, follow the money. Keep in, the mantra for expense management is follow the money. And then divvy up the money so that you're organized to say, hey, what's my true expense and what is the tax component, right? To understand that, okay? So the mantra is follow the money, and when you follow the money, the first division that you get for disbursement, the first split that you get is it a trust or a general one? That's the key one that you want to kind of identify. Once you've identified that, right, now the next step, basically, how do you record it? What are the key steps? You need to record the disbursement and how it was paid. Was it paid using a check? Was it a credit card that was involved? Was it like a money order? What did you do? You need to record that. And the reason behind the expense, the reason why you want to record that is basically because when you come back to it, that you want to know the reason why this was actually done so that you can explain to your client, okay? Record the client name that was associated with the disbursement, because sometimes, you might be doing 5 quote filings, they all look similar. Quote filing $70, quote filing $70. Now, who's it for? So you need to know the client name. Now, a single client can have multiple matters. So you want to know, hey, this $70 is for this matter of this client, and this one is for this matter of this client. So very important to understand that, okay? If paid from general account, you need to even record a few more things. You need to decide what portion you want to invoice versus what portion, you don't want to invoice. Maybe the two are different, right? You want to basically pre-bill, right? You want to basically pre-bill and say, saying a lot of distraction here. You want to kind of do a pre-bill and then and make sure that your invoice is all good, and then make sure that you can actually invoice the client. Okay. Then the next part is recover and get paid for that expense. Okay, that's the key part, because you've done the expense in general account, you raise the invoice. Unless you get paid for it, all that has happened is just the expense side. Okay, the other side has not happened. Okay, and record the invoice and the expense recovery procedure as well, because that's what completes the cycle. So there's a big cycle here that you should see here, basically, because it starts with you spending the money and recording certain stuff here. The second part is you actually invoicing the client and letting the client know that this is what you've done. Okay, and once you've done these two steps, and you've decided, hey, this is what I've spent and this is what I'm invoicing, the third part is actually getting paid. So all the three parts need to be followed for general disbursement. For trust, there are fewer steps. Okay. Now, when you look at how you spend the money, as I told you, when you follow the money, you will know what to do and what you should record. Okay. The KISS principle, keep it simple principle for disbursement, is paid out of trust. That is the most simplified way to do disbursement. The reason why that's extremely simplified is basically because, it kind of helps you with, a lot of stuff. It can basically tell you, hey, this is not my money in the first place. Just get it done with and just pay and you're done. So that's why court fee and other kinds of fee is easier to pay it from trust account. Just do it from trust and be done with it, right? Now, not everything is possible to do from trust, because, certain disbursement, the guy may not accept a check. He might be a credit card guy or something like that. So it may not be able to do from trust, but wherever it's possible, if you do it from trust, It's easy. And why is it simple? It's because when you pay from trust account, you have nothing to recover. It's client's money that you parked in trust, and you're using that money to pay the disbursement. So the flow is straight there, so there's nothing for you to recover. Okay? It's not your money after all. It's your client's money, and you're using it to spend for him, right? The expense is straight out of the trust. At the end of the day, the amount of bookkeeping that you need to do reduces considerably. As I told you, right, when you follow the rules of disbursement, it's basically spend for the disbursements, invoice the client, and then recover. When you do it from trust, you only do the first part, which is like spend from trust, and you do have to do an invoice sometime to just tell him that it has gone out of trust. You can even give him a statement of account. You don't even need an invoice, right? Like, you can give him a statement of account and tell him, hey, I've spent this. But when you do it from general, the story is very different. Right? When you do it from general or business credit card, and several times we have seen this, people actually spend from their pocket thinking that the business will pay them, right? Like this is a different kind of scenario that we have in general. You can pay from your general bank, business credit card, or owner's pocket. This is what you need to do. Record the expense information with the date. Record the amount including appropriate taxes, because some disbursements have taxes, some of them don't have taxes. Record the method of payment. Record the matter on the client. You need to do all these stuff. And then you basically need to record the disbursement, whether it was paid from bank, credit card, or you're out of pocket. The reason why you need to do all these things right when the disbursement happened is because you may forget. And if you make a mistake in recording one of these, it's going to hurt you. Like, for example, if you recorded something that you paid out of your pocket as a business expense, you're not going to get that money, right? It's going to be considered as part of the business. And then you'll find that during reconciliation that, hey, that's money, what is this? Like, I'd never paid for this from the general expense. So, recording things when they happen the right way helps you in the long term. Okay? Moving on, now that you have recorded it, how do you recover it? Recovering is a pretty straightforward process. In the recovery process, all you do is you basically have to raise an invoice. But before raising an invoice, there are a few things that you can do. Like, you recorded it. You have to check if your invoice has the appropriate taxes. You do a pre-bill. Like, make sure that the client can actually pay the amount that was actually expensed. Like, maybe you want to mark up, you want to mark down. Like, look at all your surcharges with respect to that disbursement, right? Like, and understand, and you want to do a markup or a markdown. Keep it separate if, your expense portion from the invoice portion, okay? And then make sure that your proper, that you do that with proper taxes, okay? Like, make sure that all that you're doing is all having proper taxes. Once you've done your pre-bill, you've validated everything, it's time for you to raise your invoice. So go ahead and actually raise your invoice. When you raise your invoice, this is your means to actually communicate to your client saying that, hey, this is what I've done, and, this is what I want to recover, okay? Now, if you have money in trust, you have the right now to transfer that amount from trust account via an invoice trust transfer, or if there's no money in trust, then you're waiting for the client to be paying, out of general. And now, this is a key difference you see, right? Like, when you do it out of general, there's always this unknown factor of recovery, right? If you have money in trust, that's good. Like, you can always pay yourself. If you do not have money in trust, the recovery may not happen. Okay, and it's a loss. So you got to be thinking about it. Okay. If it is paid by you or from your personal money or someone else paid for it in your company, then you have one extra last step, which is paying the third party the true expense for what you've recovered. Right? Like, you need to do that. Okay. Now, when you do all these things, the Law Society expects you that the ledgers, the journals, and all these corresponding documents are all updated. So make sure that you follow the proper Law Society guidelines and do that. Now, again, I'll stress here, if you're using a legal accounting software, the last step is for free because they do the job. Like, you do these and they do the job. But if you don't have a legal accounting software, right, and this CPD is for everybody, like, you will have to do this extra step. And this is the most strenuous step because it's a very, very, very large step. Maintaining the ledgers, the journals, and maintaining all that documentation with the Law Society. Okay? What are the types of disbursements and which ones are trust and which ones are not trust? Okay? Anything that's billable. Billable means actual. I would like to use the word actuals than billables. actuals are all both trust and general. Like, I paid $50, I'm recovering $50 from the client. Like, that's actuals. Like, there's no profit to be made. It can be done from both trust and general. You have no problem with that, like, because that's like exactly the money that you spend. You can do it from trust or general. Unit rate, like for example, faxes, photocopies, where you don't charge the client by physically what you actually spent, but you actually charge them by units. Like you can say, hey, I'm charging you 25 faxes at $1.25. That cannot be withdrawn from trust. It has to be from general initially. It has to be put as a general expense, and then you invoice, and then you recover. Okay. The difference between trust and general is in trust, like, you just put the entry as what you expense, and then you can send them a statement of account or invoice later. In general, you put the expense, invoice, and then recover. So unit rate recovery can only be done after you've invoiced. Similar thing with mileage. Like, when you travel to a court which was not in your city, and you decided to charge that client that mileage, the mileage is a general. Like, you can associate gas expense with that. Okay. Travel time, for example. You can say travel time. Like, I travel for an hour and 30 minutes. I have the charges. That's general only. Okay. Now, recovery of expense on actuals. Like, when you basically say, like, hey, this, what I'm doing is, on actuals, you can do that with both trust or general. Okay. Then the recovery of expense is with a profit margin, right, or a loss margin. I should not just use the word profit because sometimes disbursements can have loss. Like, for example, you paid $500 for a disbursement. The client can only pay $400. That's what you're charging. That's a loss. And that can be only done in general. Okay. Outsource consultancy on actuals. Like, basically, like, you did not attend the court, let's say out of town, someone else attended. You could do that in both trust and general as long as it's on actuals. Like, if you spend $500, because that's what that other company charged you, if it's on actuals, you can do it in either trust or general. But, you can always say, hey, I'm charging my client $300 for that activity, but I'll pay that other outsourced person $200. That's a profit to be made. That can be done in general. So that's how you basically look at it. Like, anything where it's not actuals, you do it. You have an option to do it from trust or general. But if it is on, if it is not on actuals, where there's a profit margin or a loss margin, your choice is only general account. Okay. What documentation needs to be maintained? I know I just put it as a single line item here. Make sure that all ledgers and journals are updated properly. But how many ledgers and how many journals exist for disbursement? That's what we're going to showcase in this slide. There are basically, if you look at the Law Society guidelines, you can go to any province, British Columbia, or if you look at the bylaw, here, when you look at it, like, it's basically, there's only a couple of ways, you can basically do this. Somebody says, like, audio is not good. I think you can dial in. There's a dialing number that we have in the email, so you can always dial in, and with your phone, don't use the computer. Sometimes the computer audio may not be that good quality, so use the dial-in, okay? So it should work, okay? So now, what I want to tell you is, like, the client trust ledgers is the first thing that you need to maintain, with respect to this when you actually have, a disbursement. Like, that's the first requirement that, that the Law Society actually has with respect to maintenance of a ledger. Now, there's a general client ledger as well that you need to maintain with respect to disbursements, like saying that, hey, this is what I had. You need to have the HST portion or GST or PST portion properly documented as well. Okay. The next thing is the fee book, because in the fee book you clearly need to say, that in the fee book you clearly need to say that this is what the fee was billed and this is HST and how much you billed. You need to mention all that stuff. There are 4 journals that you need to have, like 2 for general and 2 for trust. Now, the trust receipt journal has nothing to do with disbursement, so you don't have to maintain that. But the trust disbursement journal, general receipt journal, and the general disbursement journal needs to be maintained. What do you maintain in each of this? Okay. In client trust ledgers, Anytime you pay a disbursement, you need to maintain that. Like, for example, transfer to Taylor, that's a disbursement, so you maintain that. Like, or a transfer to general that you paid for this disbursement, you need to maintain that. That's what you maintain in the ledger. In the general ledger, all the receivables are maintained. Like, for example, you say, hey, in this invoice, this much was legal fee and this much was disbursement. You maintain that. That's your client general ledger. So the ledgers are very straightforward and simple. The journals are a little complicated. In trust disbursement journal, you maintain every disbursement that was paid out. In the client receipt journal, you have all the trust transfers that you had for the disbursements that you made from trust to general to pay yourself. And in the general disbursement journal, this is where you maintain all the disbursements that you actually paid for a particular client out of your law office, like, whether it be like, stationery, rent, or whatever it is, okay? Business expenses also come into general disbursement journal. Okay. Now the next slide is what is business expense, right? Like, we already talked about it. Like, as I told you, like, the basic reason why you're doing that is basically to manage your taxes. Now, obviously, the law society does not care about your business expense. Like, the auditors don't look at your general in a lot of detail. They do look at the generals with respect to disbursements angle, but they will not look at it from a business angle. Like, they will not say, hey, whether you recorded your rent or not. Like, but someone else cares for it. That's your tax man. Your CRA cares for it, basically, because when you go and submit your HST, right, or your corporate taxes, they actually want to know how your business actually did. And to do that, the only way you can do that is you have to maintain your expenses. Okay, what are the types of expenses there? There are several types of expenses that can be happening. It could be office management expenses. It could be like furniture, stationery, law society fees, telephone bills, cable bills, cell phone bills, gas, meals, advertisements, promotions, and every category that you could think of, right? Like, it could be here. Rent and property maintenance could be something like, hydro, all that bills could be all segregated into one. Your corporate tax itself is an expense for you, right, that you're paying. Bank charges, dividends, those are all expenses. Like, every month the bank is gouging you of some dollars. That can be an expense. If you have employees working for you, their salary could be your expense, okay? Generally, your draw, if you actually pay yourself as a draw, that's not an expense. But if you pay yourself as a salaried employee, that's a different story. Then you become an expense. But all your, accounting staff and all your other staff who work for you, whom you pay, they can all be your expense. Okay. An expense to pay back your borrowings, that can also be there because there's a tax component there, that you can recover. Now, how do you record them? When and what do you record in business expense? In business expense, it's a lot more simple. Like, you don't have to record, you don't have to tell anybody that you've done that. So there's no need to invoice and recover and all that stuff. Very simple. You just record when it happened, how it happened, and these are some of the stuff that you want to record. The date of the expense, very important, so that you can recover the HST properly. The title and the description, because you want to know at the end of the day what it is. Okay, you want to know the type so that the accounting software at the end of the day, or yourself at the end of the day, knows how much money was spent on rent, how much was spent on corporate taxes. So you want to record a category for that. Okay, amount should have total, subtotal, and appropriate tax code and taxes properly recorded. Okay, that's very key, basically, because things that don't have taxes, you want to make sure that you say that it has no taxes. Okay, the method of payment. It is very important because that can give you a reference number to go back to. Like, for example, there was a disbursement you paid and the check never got cashed. If you have the check number, then you can go back to your system and say, hey, that check never got cashed. To whom it was paid is also very useful because, when you go back and you're tracing something, to whom it was paid can be very, very helpful. Okay, and how was it paid? Was it paid from general account, cash, owner's pocket, business credit card? That can be very helpful as well. We will show you later, how to record them. There'll be a quick demo, and we'll record them individually, and we'll also show you how to do bank imports, like if your software can do, and then how can you record them in batches. Okay. Finally, what are the documents that you need for office expense? For office expense, the most important document is obviously the expense book. Like the fee book that the law society cares about, expense book is something that you should care about. The reason why you should care about it is because at the end of the day, that's what tells you how much expense you had in your business. Fee book tells you how much revenue you made. Expense book tells you how much expense you had for this month. Okay? Now, other things, documents that you can have when you basically do record your expenses is your P&L document. Like, you can have a profit and loss document. You can say, hey, this is my revenue. Look at that. Like, for family law, I made this much money. For real estate, I made this much money. For landlord and tenant, I made this much money. That's my revenue. For disbursements as expense, this thing, I made this much money. And these are all my expenses, right? Like, I can say, hey, for consultancy, I paid this much. My rent was this much. Like, my this was this much. Like, and then you subtract the two, right? And then you can say, hey, that's my P&L. Like, that's my expense versus this. Like, clearly in this one, you can see there's a profit of $30,000, basically because the revenue was far higher than the expenses that you had. Okay. Now, if there was some borrowings, then, you can have a borrowings report, like, how much was it and what you're paying, and, recover the HST accordingly. Okay. And the last one is a pure HST statement. Like, this is what the CRA cares about. Like, how much you owe for that quarter, like from January to March, the first quarter, how much you owe can be an HST report. So documents that you can maintain or get out of it is your fee book, your P&L, income statement and expense statement, your borrowings report if you had any, and finally it comes to HST statement or your CRA. Another key benefit of managing expenses is analytics. You, at the end of the day, because you have proper book of both your revenue and your expenses, you can do a lot of expense analytics. Like, for example, you can look at it by category. Hey, look at that. Rent was 17%. Interest on credit card was 52%. This one was that much. Like, it kind of gives you an outstanding view, a stellar view of how your business actually did, in that quarter, right? Or the period, like, weekly, quarterly, yearly, whatever you looked at. Okay? That's the key advantage of maintaining this and spending some time to analyze your stuff and look at the analytics, okay? Now, you can also look at it from client perspective. Hey, who was my largest client? Guess who? Josh Norman. Second one was Timothy. Like, I spent a lot of money on these clients. Did I recover them? That you can do. You can do insights. You can say, hey, insights is more like, it tells you, hey, who was the fourth highest guy? Who's the third highest guy? Who's the top guy? Like, it kind of tells you all that stuff, right? And you can do insights. You can also, on the revenue side, you can do fee book by category. You can do profit and loss statements. Like, you can analyze that. Like, how is your P&L looking like? So these are some of the, we just threw an example here of kind of analytics that you can do, but there's no end to this world, like, amount of analytics that you can do if you recorded all your data. Now, in analytics, what's the key? You can find top expenses and offenders. You can find ratio of expense to a monthly and a quarterly and a yearly with respect to your income, right? Like, that'll tell you, like, hey, I had a good month or I had a bad month. What expenses can you do in the future, and which ones you can optimize and which ones you can reduce? You will know this only if you do analytics. You'll say, oh my God, my rent was very high. Maybe it's time for me to move from this location to a better location, right? Or my Google advertisement this month blew out of my, it was way above my budget, and I should not do that. Like, so to optimize and reduce, you need this. Basically, at the end of the day, it's all about health of your business. If you don't do expense management, how will you measure the health of your business? Like, the revenue side, but without understanding the expense, you don't understand the health of your business. Now, analytics can be done in different ways. As you see here, you can look at it in a tabular format. You can look at it as pie charts, because some people are more visual. Or you can look at it in English. Like, hey, fourth highest expense is this. Like, we can look at it in very verbal. It's called insights. Like, so you can look at it in several ways. And that's how analytics can be done. Okay. Now, the key benefits of analytics is it gives you the knowns and it gives you the unknowns. Like, and then you can react to it and you can plan for it. Right? If you were not expecting rent to be 43% in a category, and you were saying, like, hey, my rent was not that high, or maybe there's some work that I can do to minimize my rent, like, by doing some, office sharing or something like that. This analytics will tell you that. So it'll give you the knowns, the obvious ones, like, hey, Josh Norman was high, and you might have had an idea, but it'll also give you the unknowns. Okay? So that's the key advantage of analytics. Okay? Benefits of legal accounting software. I've been mentioning that all along, doing this manually is very hard. I mean, it's not impossible. There are several people who use spreadsheets to maintain that. But at the end of the day, as you saw here, right, you need to maintain these 6 documents, for just disbursements. And, for office expense, you need to maintain these other 4 documents. So maintaining 10 Excel spreadsheets is not a joke. It's not easy. I've not seen people very successful with that. That's one of the key reasons why we believe that you should have a legal accounting software, right? Not just a practice management software, but a legal accounting software. Only legal accounting software will allow you to record events when they happen, give you a financial perspective, match it with your bank, make you, walk you through the process of reconciliation, right? And it'll make your business sense at the end of the day. I always stress, the key advantage of using legal accounting software, the payback is on 2 steps. One is the recording part, because now you have the data. And the second is the reconciliation part. When you do these 2 steps, you basically have kept your books up to date. And when you keep your books up to date, these are side effects. Basically, compliance, accountability, and analytics and ease of use are absolute side effects. The most important part is recording and reconciling. If you reconcile your trust account and you reconcile your general account, everything else is a piece of cake. Now, many people have questioned me and said, hey, trust account, yes, reconciliation, very important because the law society needs that. Do I need to reconcile your general account? If you personally ask me, general account is equally as important as trust account, if not more. The reason why it is equally as important is because if you don't reconcile your general account, your books are in a mess. You have no clue what's happening to your business. You don't have a business sense when you're not doing reconciliation of your general account. So to me, just because the law society does not audit general account does not mean you should not do general reconciliation. And finally, if you don't do general reconciliation, your HST that you owe to your CRA is completely out of whack. So when that tax audit happens, you are in big trouble. So it's not the law society auditor that that matters. It's the CRA auditor also matters. So at the end of the day, these 2 auditors, one is auditing the trust account and one is auditing the general account. So that's why reconciliation is a key element. What reconciliation does is it looks at your revenue and your expense and matches it with the bank, make sure that everything is perfect. Okay, that's the key element. So I'll leave you with this final thought, and then I'll get into a small demo. We have about I would say roughly about 10 minutes to do a small demo. We're just going to use uLaw just for demonstration purpose. By no means this is a product demonstration. It's just to show how recording has to be done and how you generate documents. And then finally, I'll open up the phone lines. But even now, the phone lines are, the chat lines are open. So if you have any questions, I can answer them for the presentation or the demo. So let's keep it very interactive as we go along. So I'm going to now bring up a demo, and I'm going to show you a couple of things. First thing, let's tackle disbursements. Okay, so I'm going to create a new contact for this particular demo. Let's say it is Haley, what more? Okay, and then obviously you can say 81 King Street, Ottawa, Ontario, Canada. Okay. Right, and I'm going to save. And once I've saved, then I need to create a matter. In this particular example, I'm only going to focus on disbursements. Okay, let's create a matter, and the matter is say Haley versus John, and it's a small claims matter. You can mark whatever type it is, corporate, family, whatever. I'm going to mark it as a small claims because it's very simple and easy. The first question that I was asked is about trust disbursement. So I'm going to take a very small retainer because without retainer you cannot do trust disbursement, right? So let's say the retainer was $500. You received a check. Let's backdate it. so that like it makes sense. Let's say it was on the 23rd of April, and it was received from Haley. You can just see, watch all the fields that I'm recording, right? Like, I'm recording the date, the amount, was it cash or this, the method of payment, the description or the reference number, the account where I'm depositing it, received from, and my distribution. I can even collect payment if I want, and I'm going to give a receipt and apply. So you saw the number of fields that a legal accounting software forces you to get. And the reason why it does that is basically because it wants you to be it wants to show you the accountability for that. So there you go. That's your receipt that you can provide to Haley, saying that, hey, Roger Moore has taken $500 off retainer from you. Okay. Now let's look at disbursements. As I told you, follow the money. It's a trust disbursement. Obviously, I'm going to click on the trust button here, right? Like, I'm going to click on the trust button. Is it a deposit into trust account? No, it's not a retainer or this. It's a disbursement. So I'm going to say withdraw from trust account, right? And it's a disbursement, so other payout from trust. And I can say the reason. You can say, hey, check number 45, court fee. Obviously, this cannot be greater than $500. Let's say I put $600. It'll say, sorry, it can only be $500. Look at that. The software will correct itself. You will not have an error. I'm going to put a $75 to be sure. Paid to City of Brampton, right? Payment. There you go. Money withdrawn from the trust account. Accounting stops right here, right? I received $500. Look at my statement of accounts. Very clear. I received $500. I paid $75. I'm left with a balance of $425. That's all you need to do with respect to disbursement paid out of trust. There's no recovery. There's no invoice. I mean, you can invoice to tell your client, hey, I did this, and let's do a quick invoice. Let's say I did a pre-bill, right? And you will see the invoice is also very simple. It just says like, hey, retainer paid out of trust. That's the balance, right? And it tells you like 425 is the retainer balance in trust. Very simple, right? Let's now look at follow the money. Let's say it was a general disbursement. So I'm going to click on the general button. Is it a deposit? No, I didn't accept any client payments. The disbursements are always withdrawal. When I click here, these are my options, right? First one, you pay disbursement from general account. Now, notice that it's very clear here. There's a line that tells you the top portion is what you're charging the client for invoice, and the bottom is what you actually spend for it. So let's go for an example. Let's say an application fee, right? I'm going to make it like say $100, so because that way I can show that. For some reason this is set to British Columbia. Let me change that to Ontario. For some reason, the demo account was set to British Columbia, so I'm going to change that here. Okay, I'm going to now follow the money. General, pay from disbursements, there you go. HST, nice. Okay, application fee, $100. There you go, it calculated $13 with HST. The bottom is where you report for the expense. Yes, the amount was $100. Maybe there was some surcharge. You can put the surcharge too. Hey, you can say, hey, I had a $2 surcharge. I'm not passing that to my client, right? So the $2 surcharge. So I actually paid $115, for doing that application, right? And we're passing it on. And you can say I paid it from my general account, and I used, what kind of transfer was it? Like, credit, what kind of transfer was it? Like, was it an email transfer or just a check? I just wrote a check. I put the check number, and again, watch this. Number of things that we have recorded: the date, application, this, that, and save. Now, when you do that, what have you done? All you've done is you've recorded your disbursement. When you go here, it shows you that you've recorded the disbursement. In general account, there's still nothing, basically because you have an invoice, right? So it's saying invoice is pending. You can't recover this money. But if I click on the question mark, it says, hey, there's nothing to transfer from trust, right? I cannot transfer and pay myself. So now let's go to the act of actually invoicing. I'm going to do a pre-bill. Always a good habit to do a pre-bill. Then I open the pre-bill. Generally, I would have my dockets, but in this example, I skipped that. But you see that disbursement, right? $113, right? If I go to my last page, on top of what I already did, if I subtract, that would be my balance interest account. Okay, so let's go through the act of actually creating an invoice. Okay, I'm going to really do an invoice. I'll download this invoice. Right? There's no pending action required. When I hit the question mark, it tells me, hey, I can transfer. Click on the transfer button. It'll allow me to transfer exactly $113. Now, this is the key element of a legal accounting software. It'll tell you, hey, you cannot transfer a cent more or a cent less. You can't transfer 112 or 113.01 cent. You're exactly transferring that, right? And you can do an EFT. You can put your electronic requisition number, right, and hit the transfer button. This is how you're recovering. You're paying for yourself, right? Then you can download Form 9A, right? And there. There you go. That's my Form 9A for that disbursement, right? We can walk the whole 9 yards with that matter, right? Now, look at that. 113 was my disbursement, and I recovered it. There's nothing to recover in general. It tells you the balance is zero, right? So let me go back to my presentation here. So if I look at my presentation, so what have we covered in the demo? We looked at, trust disbursement, and we looked at, this procedure, basically raising the invoice and doing that. Now, let's talk quickly about, types of disbursements. There are several kinds, of disbursements. So if you look here, paid from general, actuals. Like actual is like, what you paid is what you're going to recover, right? Like there's nothing to report as an expense. That is your amount, right? You can do that. Now, you can also see a unit rate. Like, for example, if I type fax here, I can say, hey, 13 faxes at $1 each. And if I did it from my office, no expense. If I did it outside from Staples Business Depot, it cost me $5, right? There you go. You can say Staples. Look, the number of stuff that you're actually recording, because all these things will actually help you in future, right? Because when you produce that beautiful document, you will see all that stuff. So going back, we kind of showed you all that. Oh, what about the consultation expenses and all that stuff? So when I click here, it can be a consultation expense. So consultation expense are pretty nice. You put what you're charging your client, but here you can say what kind of firm. Hey, John's Law Firm is the firm that I paid, $500, and and I charged the client $600, right? And you can say consultation expense. You can say out of province or visit, right? Okay, and you can also change the tax code, right? If it actually happened in Vancouver, and that John's Law Office in Vancouver just charged you a 12%, you can put that 12% here, right? Not the 13%. You can override that. Okay. And how did you pay for it? With using a gold credit card, you can say that. Okay. So that kind of covers that example. We have a few more minutes. Let me just wrap up this demo and then open up the chat line. But feel free to ask me any questions all along. Then, profit margin, we showed you all these things. There are other kinds of disbursements like prepaid. Several people use software like Conveyancer, or all these prepaid ones, DivorceMate. Those are all prepaid. So you can establish a prepaid and then come back to this later. I'm going to quickly change subjects and move to office expense management and analytics very quickly. So office expense, what do you record? We talked about all these categories, right? Let me show you the categories and then all these things that you record, right? Okay. So in accounting, your chart of accounts actually should have all the categories. So if you go to the expense category, salary, consultancy, rent, client expense, that's what we showed. That's disbursements basically. Office expense, look at that. Printing, stationery, photocopies, travel, you can do all that stuff. Depreciation, interest charges, bank charges, dividends, taxes, corporate taxes, your this, and your payroll is also an expense for you. Okay? Now, how do you record that? Very simple. I'm going to show one office expense. You can just say office expense, and I can say, let's say rent, and say 32 King Street property rent. Maybe the owner gave you a voucher. You can, the invoice number. You can put that. The rent is $700 with HST. It becomes $791, and you issued him check number. So that way, in case if it was lost, you can say, hey, I'm tracking this, and just paid to Minto. Yeah, let's hit the submit button. Right? As simple as that. Now, when you do that, if I kind of do I'm just going to do a funny P&L for the day. Let's just say I do it for today. I do a download. You should see the expenses that I had today match up with my rent here. Like, say the income was only $100 because I only raised for the disbursement, but you saw I had a lot of expense today. The consultancy, I haven't raised the invoice, right? So that's why the expenses are already showing up and the income is low. So for today, I'm having a loss. So you see this P&L, what a powerful tool it is. So if I raised an invoice, let me quickly do that. The P&L would change because now, I'm recording a lot of income there. So let me quickly raise an invoice for today. Okay. It tells me immediately. The P&L tells me that I haven't completed my job, right? Let me quickly go ahead to account, and I'll do a quick profit and loss. Today, do download. I should have a P&L. That should now have. Still, the loss is minimized because my income increased. But as you saw, there were certain things that I had a lot more expense than income today, mainly because of my rent. Right? So that kind of gives you all the documents. Okay, the key elements is compliance documents. So let's switch gears there. If you click on the compliance, the two ledgers I showed you, the trust and the general, you can just download. Let me do a quick ledger for today. And let's do. I'll just do a show only. So here, Hallie Watmar. So as you see here, $75, came in, and this, that's today's ledger, right? It tells you that the balance is $312, right? And if I would do the general, oops, skip. So you can say, let me do again. I'll do a show only for general. There you go for how that's Hallie Whitmore. Here it is. The disbursement I raised, I recovered. The fax and the consultancy I raised, but I haven't recovered that yet. The client still owes me that money. Probably it's there in trust. I can transfer some of the money, right? In trust. Gives you an idea. So again, the compliance documents 1, 2, 3, 4, 5, and the fee book, right? Expense book that CRA needs. Okay, Form 9A, they're all here. Okay, reconciliation, very, very important. They're all here. So these are the documents. So let me go back to the presentation, and yes, we've covered this in the demo. We've covered that in the demo. We kind of showcased you all that stuff. The HST report, let me quickly do an HST report for the quarter. We say, taxes, HST, quarterly. Obviously, my quarter is not ended. I'll quickly do a report. And hopefully it's owed. Yeah, that's good. So that means we made a lot more money than what we spent. And that's all the HST that you received, and that's all the HST that you paid. So at the end of the day, you subtract the two, and that's what you either owe or you need to receive from the government based on where you are. So in a nutshell, expense management is very key, basically because it kind of shows you all the stuff. So finally, we have about 5 minutes, and I'll show you a quick demonstration on analytics. Now that we've done everything, I can look at this more graphically. I can say, hey, how does my analytics look like? Like for example, let's say expense by category for daily today. If I hit the go button, see, it tells me like, hey, John's Law Office, rent, and expense on client is that much. I can look at it as a bar chart, or I can look at it as a pie chart. I can say, hey, John's Law Office, rent, and my expense on client. It gives you a good view of what you did today, right? Similarly, if I look at fee book on client, obviously there's only one client today, but I'll do a quarterly report. If I do a quarterly report, it should tell me all the clients this quarter, right? Like, if I do a bar chart or a pie chart, clearly Abby Diol was awesome. Henry Horsepower, Haley is here. Haley Wetmore, she's about 11.3%. Kind of gives me a view of who's where. Okay, bar charts, pie charts, tables. You can do all that stuff. We can also do, other kind of insights, right? Like, if I would look at expense book for this quarter and I would do a go, it would give me view on. It's another way of looking at, I would say looking at the whole thing, right? Like, rather than looking at it as mathematically as pie charts or data, you can look at it in detail. Look at that. What is the total expense for this period? What's the total, for this disbursements for this period? Percentages, right? It gives you who are the top guys. Like, hey, Magic Johnson, he's the one with whom I had maximum expense this month. Like, my business corporate expense was high. My Haley Wetmore was that much. She was the third, Haley. And then Pandya Chandran was fourth. Like, it kind of gives you an idea. So this is an English way of looking at your expense. Like, so that gives you more ideas what you want to do with your expenses. And finally, like, you just don't have to do all these things by insights or bar charts or category. You can also look at it from a holistic view with respect to P&L. Like, how was my quarter, right? Like, you can just say profit. That's good. So then next, the total profit is that much, right? Like, so you can either look at it as expense or revenue, but you can look at it as a combine as a P&L too. See what are all the questions that we can answer, right? Each of these categories. At this point, we have a few minutes. If anybody has any questions, I don't mind taking them, either on the presentation or on the demo. So, first question that I had here was reconciliation of general. Is that required? Oh, I think I stressed that during the presentation. Yes, in my opinion, general reconciliation is equally as important as trust reconciliation. Basically, because if you don't do general reconciliation, your HST is not correct. That's why we insist that you do both trust and general. And only when you do a general reconciliation, your HST is correct and you can actually, pay it with confidence. Otherwise, like, you could get into trouble with CRA. We've been very vocal about this to all our clients, saying that, hey, on the 25th of every month, you should be doing both trust and general. Don't keep it longer than that, basically, because, sometimes you forget and, you get into trouble. I hope that answers your question on one more question, which is if I don't have taxes on my disbursement, how do I record it? Okay. It depends what kind. Okay, so let me go back. So, see, you must have already noticed when I do disbursements from trust, right? When I do disbursements out of trust, paid from trust, you clearly see there's no tax. Like, what do you mean by that is, like, it's a full amount, like, because we don't care about tax, so there's nothing to recover or anything. You just say $113, like, whether it was with tax or without tax, you don't care. Whatever it was you charged in whole, that's what you just put, the total amount, okay? And that's what you put, and you hit the payment button, right? Like, so that's the way you do it in trust. In general, however, that's not the case. You need to, you put the amount, and then we calculate the taxes for you. We basically say, let me show you a general one. So if I go into action, general, you have to say here, hey, that's my amount, and we will calculate the taxes for you. And that's very important because that's how you divvy up the taxes. Another question was how to correct a recorded entry whose invoice has already been issued. You put an adjustment entry. Basically, once you're invoiced, things are like pretty much cast. You told your client that, hey, that is my stuff, right? Like you once you're invoiced, you put things into cash. So that's why we lock it. Now, you got to be a little careful here. Like, for example, let me a little bit answer this question. Application fee, for example, when I edit it, I cannot edit the top part. That is not editable, basically because that's cast in stone. But I can always change my bottom. I say, hey, you know what? I made a small entry here. This was actually $96. You could do that. The top is not editable. The bottom is definitely editable. Okay? You can unlock and save it. There's no reason why the bottom is not. The top is not, basically because you put that in cost. So you basically need to give an adjustment for him as a discount or charge him more or something like that based on the issue, right? You can do that. The bottom, which is your reporting of expense. Now, you cannot do that. Let's say, I'm just going to close this, and I'm going to do a quick reconciliation. If you actually reconcile, that's a great question, actually. If I reconcile my general, I'll just reconcile it for today. Might be a lot of entries. Let me just, there are 30 entries, 1, 9, 3, 4, 1. Just clear all of them. Now, some people ask me a question like, why is this in green while the rest are in blank? Now, the reason why that's in green is because that's a bank import. When you directly import it from bank, we know that you can just click on it because it's already reconciled. Okay, that's why that's green. Let me quickly reconcile that. You'll see now, only when I do that, the bottom will get locked. Until you do the reconciliation process, only the top portion gets locked, even if it's invoiced. Okay. You reconcile that. Now, if I go back to my matter, and I try to edit my application fee, it tells me it's all reconciled and I cannot change this anymore. Okay? It will not allow me to do it. Even if I unlock it, it will tell me, hey, it's all docketed, it's all done. You cannot change that. Okay, so hopefully that was, useful. It should even tell you when it was actually reconciled. It would do that, in certain cases. It would lock that entry and say that was reconciled to this particular time. Oh, you have to reconcile that account to which it was done. Okay, then only it will mark it. Any other questions? Or otherwise, we've kind of run out of time here. Thank you everybody for joining this webinar. Praveen will be back next week, and he's missed a couple of this, but he'll be back next week. I know a lot of people ask me that question, and he'll be back next week. Thank you so much.